Jay Coulter here at the Morningstar Investment Conference. I'm speaking with Madeline Hume, analyst for Morningstar. We're going to talk crypto. If you're watching this recording live, please ask your questions in Twitter, LinkedIn, Facebook, or YouTube, and we'll pose them to Madeline. You just did your session. What'd you talk about?
We talked about digital assets and whether or not they're more than just bits and bytes. We looked at the inner workings of blockchain technology and how, a simple cryptography problem became an international sensation with over $2 trillion in market capitalization and all the different steps along the way.
Yeah, a lot to talk about, a lot going on in the crypto markets today.
Yes, as we speak, things are going on. I had to check this morning what the valuation was before I gave my presentation because it changes so much day to day.
Right, probably right before.
Yep, just right before.
All right, so we have a pretty sophisticated audience of financial advisors. Some have been dipping their toe into the space. Some are still afraid of it. What do advisors need to be thinking about as it relates to crypto?
So Morningstar has been looking at cryptocurrency as an asset class for a little bit now, and it's evolved since it was founded and since we have meaningful performance data, which starts around 2015. What's interesting about cryptocurrencies, and everybody knows this, is that it's a very volatile asset class. It's highly concentrated in a few names, and we know what those names are. It's Bitcoin and Ethereum. But what people may not keep in mind is that the volatility of cryptocurrency is so huge that the only asset class that we see that has volatility anything like it is oil futures. And if the events unfolding in Europe are any indication, oil futures are probably not appropriate for your investment vehicles. And so we say that the same is true of cryptocurrency as well.
Yeah. All right, so let's talk about some of the hot topics today for financial advisors in this space. Mm-hmm. Let's start with Fidelity. Mm-hmm. So they've added the ability to allocate to Bitcoin in their 401k. What's your take?
At this point, the Fidelity announcement puts the cart before the horse. There are still a lot of investor protections that need to be worked out in cryptocurrency. And the DOL has not yet formed a position on whether or not cryptocurrencies belong in an investor's portfolio for retirement. Looking at the volatility of the asset class, just to put it in perspective, if you have a 60-40 portfolio and you invest 2% in Bitcoin, that contribution to volatility can rise over 50% of your portfolio. So Fidelity's 20% allocation ceiling seems a little bit generous to us. We'd probably put it at 0.
Yeah, I mean, there's no 20% allocation to anything in the alternative space with that type of risk profile in the volatility sphere, just because it's so unknown. Don't you think there is some liability for financial advisors as they look at leveraging that platform?
Absolutely. Well, and, for plan sponsors, there's a ton of liability. Fidelity themselves doesn't carry that liability. It's the employers. They're the ones that are going to be engaging with their investors in court. They're the ones that are going to be shouldering that responsibility. And there aren't a ton of examples in history of times where we've seen a single asset on a 401k menu. Normally, they're diversified investments with a ton of underlying securities. And so this is a bit of an anomaly in that regard.
Let's pivot. Luna.
Yeah.
What's your take?
It's kind of a sad story, to be honest. And the investors that were engaging in Luna have lost a lot of money in the last week. I mean, the moon has effectively fallen out of the sky for those investors. For those who aren't familiar, what happened was there was a particular coin designed by this Luna ecosystem that was supposed to be worth $1. And it traded at $1 for a very long time, but it wasn't actually backed by any financial securities. This was a known thing. It's not a surprise, but the asset that it was backed by is the Luna cryptocurrency. That can trade wherever, but theoretically, the investors in Terra were able to redeem their coin for $1 worth of Luna. But when the cryptocurrency markets are plummeting, sometimes you can't sell out of that investment fast enough to get your $1 back. It may be trading at 80 cents by the time that you're selling it. And that's what we saw happen. And when you don't have any financial securities that are backing these assets, it's really just resting on investor confidence. And when that crumbles, the entire cookie falls apart.
Absolutely. I'm speaking with Madeline Hume here at the Morningstar Investment Conference. Let's talk about regulation and the whole digital asset space. What do you see playing out?
As far as regulation goes, and I'm sitting here in the U.S., and so it's going to be a completely different picture in different markets across the globe. But what we see from the U.S. is a real desire for more regulation and a greater regulatory presence. And we at Morningstar definitely would support more investor protections in the cryptocurrency space. Just to give one example, there's no protections against insider trading in cryptocurrency. If you know something and the rest of the market doesn't know it, you're free to trade on that information and get out as quickly as possible. And everyday investors are going to be left behind with those kind of actions.
So kind of along the same lines, let's talk about Coinbase. They've been in the news because of some disclosures in their filings as to what could happen during a bankruptcy proceeding. What's your take?
This was an interesting case where, the market really reacted to this statement in the 10K. And I was I think it was a 10Q, but I was kind of scratching my head because they'd been using similar language for a couple of quarters already. And so basically just cautioning investors that because they're not an SEC registered exchange, that they don't have insurance that protects the full balance of their securities. That's not new. What is new is that warning was given in the context of a potential hack of the cryptocurrency exchange, which we're pretty familiar with. People who have been watching the crypto space for a while, it happens pretty regularly that exchanges get hacked. Not surprising that a lawyer would pick up on that and say, hey, this may happen. What's intriguing about Coinbase's most recent financial statement is that they also included a more blanket statement cautioning against bankruptcy as well. And so we're continuing to watch the developments of that.
Excellent. You have one more session here. Is it tomorrow?
We do, yes. Good memory.
And what are you talking about?
So we're going to be talking about more women invested in crypto. We at Morningstar here are expecting the cryptocurrency market to show, not tell. And so our take on it is maybe women are just smarter.
Excellent. We're going to wrap on that. If you'd like to grab a digital pass to the Morningstar Investment Conference, head over to morningstar.com. We will be here Monday through Wednesday. Thank you, Madeline.
Thanks so much for having me, Jay.